Welcome back, everyone. This is NYU Grads Daily Podcast on Wednesday, September 27th. Hope you had a great day today. Not as much to cover. It was kind of a little bit of a bounce slash back test today, but let's jump into the data and talk about context here. So, yesterday and the last few sessions were pretty bad. So I was expecting before Thursday's Jerome Powell speech after the close, the markets had to at least try for a comeback, right? However, when you take a look at today's trading action, it wasn't too good. Let me explain why. So when you look at breadth, we had 81 new highs, 752 new lows. Most of that damage was done from the open until about 1:45 New York time, at which time all the indices were red. Dow, NASDAQ, S&P, all the Magnificent Seven stocks were red. But right around 1:45, there was an attempt to rally. Although the volume of the bounce or rally was not strong, I noted that on Substack notes that the volume of breadth was not picking up. It was pretty weak, so it might fail. I actually posted exactly that note in the afternoon. I was like, hey, breadth is not picking up here. This is a potential rally that might be faded, and that's sure enough what happened. We almost broke even to where the Dow closed yesterday, which was amazing. But right after it got there, around 3:05, 3:10 p.m., it rolled over and it started selling off. Same thing with the NASDAQ. NASDAQ opened up but then sold off all day till about 2 o'clock, and then it started to spike and bounce really hard. I'm talking vertical. Like, I couldn't find a headline really on why. It just was launching, and all the Magnificent Seven started going up. But around 3:10, that too hit a brick wall and it sold off into the close. And the NASDAQ, back to the Dow closed down 68 points or 0.2%. So not big of a deal. The NASDAQ closed up 29 points or 0.22%. And the S&P, same thing. We opened a little bit green, sold off all the way to 2 o'clock, and then it bounced, and then it rolled over into the closed. The S&P closed up almost a dollar or 1 point, so 0.02%. So when you take a look at the empirical number of the close, not a big deal. But when you take a look at the complexion of the day, it was heavy selling all the way till 2. A rally attempt at 2 o'clock, and then it failed and closed just at around where we closed yesterday. But when you look at the breadth numbers, as I mentioned, only 81 new highs and 752 new lows. Right now, you have 80% of stocks under the 50-day moving average. That is not good. So today was just basically a nothing burger, but a lot happened. There was a lot of volume. I don't want to make it sound like there was no volume. There was a lot of volume. But we closed almost near where we closed the session on Tuesday. But there was a lot of selling going on under the hood. When I take a look at what kind of moved to the green today, you're going to have a lot of the big names, right? NVIDIA closed up 1.33%. Google closed up 1.5%. Costco up almost 2%. You had energy, which is not a good news for bulls or inflation fighters, was up, like ExxonMobil up 3.26%. Chevron almost up 2. So yeah, like Hess is almost up 3%. You had JP Morgan up like 0.6%. Wells Fargo up 0.5%. But that's it. Everything else is red. Apple down almost 1%. Microsoft down 0.25%. Amazon was flat. Tesla was down 1.5%. So yeah, like it's a sneaky day. I feel like it tried to just kind of tread water, but if you look under the hood, there's a lot of selling going on. Let's see. So just kind of wanted to reiterate, I posted this as well on Substack Notes, but if you missed it, September typically historically has been kind of bearish, and then the last 3 quarters heading into the Christmas rally or the holiday rally has been bullish. And I'll just go through kind of the last 4 years. So for September's in 2020, it was down 3.92%, the market. In 2021, it was down 4.76%. 2022, it was down 9.34% in 2022. In 2023, it was down 5.19%. Obviously, we're only through this data is not complete because we're still in 2023. So we'll see how we end the month. We have a few days left. The last 3 quarters, the past 4 years. In 2020, it was up 11.69%. Even during the COVID year of 2021, we finished up in the last 3 quarters 10.65%. In 2022, last year, it was up 7.08%. And obviously, we don't know where we'll close this year. So it's not guaranteed that Q4 is going to be green, but if you look at the last 4 years, it has been green for the markets. So let's keep that in mind going into Q4 and going into end of Q3, end of month, end of quarter. Wall Street may do everything in their power with their friends to try to rally, right? But the flip side is, with all of this historical tailwinds helping, if we cannot rally with those historical tailwinds and the fact we're very, very oversold, that's really bad. So that's just some context for you, what to watch for as we close out the week in the markets. Let's see, what else stuck out? I'll just go through what kind of stuck its nose out and was strong. DoorDash, Dash is the symbol, DASH, up 4.7%. PI, technology name, up 4.28%. LYFT, up 4%. DraftKings, DKNG, up almost 4%. Wayfair, the furniture retailer, up 3.41%. AI, up 3.3%. Carvana, up 3.29%. Klaviyo, recent IPO, 2.81% up. You had oil, or USO, up 2.5%. PJT Partners, which is a financial firm, up 2.27%, specializing in mergers and acquisitions. What was weak? There was equally as weak shares. VinFast Auto, that Vietnamese EV maker that looks like it's going to go to zero, it's down 12.9% again. CART is the symbol, CART, for Instacart. It just came IPO last week, down 4.5%. VIX was down 3.8% today. Gold is the symbol, GOLD, which is Barrick Gold, down 3.75%. GDX also down almost 3%. Obviously, the dollar is strong and persistent because yields are persistently high. We're breaking records right now on the 10-year yields every day. That is not going to bode well for risk assets. PayPal down 2.7%, and KYVA, the summer IPO of the Greek fast food chain, down 2.69%. That's really it. I think the markets are trying to wait for Thursday and Jerome Powell and what he's going to say, but there was a lot of selling until 2 o'clock, folks. So this is a very dangerous area. Jerome Powell speaks on Thursday at 4 o'clock. And another big development here is everyone was talking about this massive cup and handle on the S&P 500 or the SPY, as well as on the Qs. Well, on the SPY, that cup and handle is now pretty much broken. The handle channel is no longer intact. On the QQQ, the cup and handle can still work. It can still work here, but it's hanging on a limb. When I look at any of these charts, we are basically looking like we're going to test the 200-day moving average. We are still in a very risky situation here. Majority of all Magnificent 7, are under the 50-day moving average, and they're definitely approaching the 200-day. It has to hold. If the 200-day does not hold, selling is going to beget selling. Algorithms are going to trigger. Sales orders are going to trigger. And Q4 will buck the trend. And we're going to have a nasty Q4. So those are the things to look out for. I will see you guys on Thursday after the close. And I will have a semi-report on whatever Jerome Powell says. You're going to see after hours activity anyway. And one other key thing I want to mention. There are a lot of unions right now on strike, whether it's the UAW, whether it's the there's a new one, the culinary union out of Nevada, who basically are all of the workers in the casinos. They're going to strike, and F1 is coming soon. That's going to impact their tourism as well. But there's a few unions that are on strike now. I think they're going to all look for inspiration, and it'll snowball, and they'll say, hey, look what the UAW was able to do. Look at what the Truckers Association was able to do, etc. And I think more people are going to join more unions, and more unions are going to start to threaten strikes. And it's all about inflation, right? Like, they feel like the wages are not keeping up with today's inflation. And then on the flip side, you have the Fed saying they're fighting inflation, and then you have political pundits. I'm not going to get political here, either aisle, but both sides are saying, oh, we have inflation under control. So there's this cross current of messaging that doesn't align. I think we all know what is true. Inflation, whether it's true or not, I'm going to leave that up to you. But yeah, that's it for today. Nice and short and sweet, under 15 minutes. I will see you guys on the next one.